In international markets at present, it's all about nerves of who has the minerals to stay in equities at the moment, whilst there is so much concern about contagion in Europe. When looking at Europe, the major concern for investors is the cost at which governments are able to raise debt at to help them pay their bills. When looking at this, it is important to benchmark against a particular country, and in Europe, the safest country at the moment appears to be Germany. The cost of raising their 10-year debt costs only around 1.8%, when we look across the border to France, investors perceive that their nation is a little bit more risky and their cost of raising 10-year debt costs around 3.5%. And the major concern at the moment, Italy, their debt cost is around 7%, while the bucket shop of Greece costs around 33% to raise debt for 10 years. 7% is widely seen as the level at which it becomes unsustainable for countries to raise debt at. When many of the countries have had their debt skyrocket above 7%, they have failed. In Portugal, when their debt went above this level, they were able to last 45 days before they required assistance from the European Central Bank. Before Ireland required a bailout, they lasted 15 days with their debt above 7%, and the bucket case of Greece lasted only 13 days before they required a bailout from the European Central Bank. Back in New Zealand, the cost of debt for our government has been lowering recently. This is due to the fact that New Zealand has become a very attractive alternative investment for investors overseas. Obviously, they're looking for a decent return on their money and also a safe return on their money. When they look towards Europe, obviously there's too much risk at the moment. Although some of these countries have very high yields on their government debt, the reality is the high yields are only because of the fact that investors are starting to price in the risk that many of these countries will fail and they may not get 100% of their debt back when they invest in these countries. Also, when they look towards US, although they see a very safe haven for their money, the reality is the return on their investments are very low at present. So when our New Zealand Debt Management Office issued debt yesterday, our 10-year government bonds came in at the lowest levels ever, around 3.94%. It seems that a lot of the bidding has come out of Asia at present. Obviously, these investors are looking towards New Zealand, seeing our agricultural and commodity export story, and seeing that it is very attractive for them to have their investments in New Zealand. On the back of this, the New Zealand dollar has also performed reasonably okay overnight, although we're slightly down against the US dollar. Currently we're trading around 75.80.